Hello traders, welcome to our new week ahead video. My name is Grega Horvat. I will walk you through a lot of charts this weekend because Blake is away. So unfortunately every time when he is away we are seeing a very huge volatility here. So I'm stepping in to cover you with some new fresh updates. So maybe you noticed that stocks have seen a very strong decline, a very sharp reversal yesterday. It was just a matter of time when stocks will come to the downside in line with cryptos, because as you know we have seen a pretty steady rise for the last several months, and now Trump has announced that he will bring in new tariffs on China after he said that China has tightened export controls on rare earths, which is obviously very important to technology. So you can see here that we are seeing a very massive sell-off, but usually that's always how the market function. Whenever first news hits the media, we will see a sharp sell-off, especially when this news comes out on Friday, because that's when markets are even more sensitive, because no one knows how stories will unfold through the week, and that's why we are experiencing such a strong sell-off. But if we take a look maybe on the S&P 500 counts here, keep in mind that I'm still seeing this as a potential temporary pullback here within high degree uptrend that may not be finished yet. So I'm seeing this as a correction, wave 4 in Elliott wave terminology. Now also what is important whenever you are starting to observe some kind of a pullbacks, which is clearly now underway, is that these pullbacks, corrections, that's for some who is not familiar with the Elliott waves, these pullbacks or corrections should be made by minimum 3 waves. So it usually will take some time before this correction will be finished. And what's probably also important to notice is that we have some very strong volume here, which could keep this correction definitely here in play for a bit longer. Also look at VIX, it's coming quite nicely to the upside here, but maybe it's worth to observe the previous spike here to make S&P 500 even weaker and maybe move to more important support. So I think that very interesting support when you look at the daily chart here is definitely here from February of this year. So if this level is tested, it's still fine, it still could be wave 4 within uptrend. Of course, break below that level would suggest, and especially below 6k, would most likely suggest that we are in much higher degree correction here. Now looking at the 4-hour time frame, so as I said earlier, whenever we are tracking a corrective pullback, this pullback should be made by minimum 3 waves. So I think that we could start tracking here an ABC drop. So we even breaking this channel support. Let me just bring the labels here to the right places. So we are just breaking this channel support. So a lot of fear is going on, and this fear could even spread into the start of the next week. Usually when we have a very strong sell-off on Friday, then at the beginning of the next week, Monday, Tuesday, you can see that this risk-off could even resume further. But as I said, even if we see some stabilization, there could be only temporary rebound for a wave B rally before we see even more weakness. So I'm looking and targeting for more lower prices. Also, whenever this wave 4 correction starts, which is the same degree as this blue wave 2, then usually I will take the distance of a wave 2, compare it from the top here of wave 3 to get the projection potentials for potential supports in the wave 4, and this comes in around 6,400. Also there is a 23.6%, and the 38.2% is a little bit lower at 6,250, which is 215, which is very close obviously to this 2025 February highs. So this zone could be very interesting. Of course, we would love to see even more weakness that even more fear, even more traders, investors to be out of the market before we may finally stabilize and once again continue to the upside. But obviously now we are still in just early stage, I believe, of this ongoing correction. Now it's interesting to note that that here on the dollar, I'm looking at dollar index, we haven't seen any significant push to the upside. That's mainly because the euro has been holding up quite well. Commodity currencies have seen some hit, especially Aussie, for example. So this dollar index is still somehow trapped in this summer range, basically. Okay, so that was June low, that was July or August 1st high, and we are still trapped within this levels. So I think that it's still premature to say where the dollar will move if we do not see any kind of a very strong breakout. But what is maybe the most important, at least for me, is that if I look here on this cycle of dollar index, that's a weekly time frame, and here back in September 2024, Fed cut the rates after some time, and then market actually bottomed and reversed higher. So market firstly moved to the downside with the US dollar based on rate cut expectations, but when they finally cut it, market a few days later rebounded. So I was looking for some similar play this year as well. So as you know, everyone expected, and they are still expecting, more cuts from the Fed. So market dollar came to the downside quite nicely, but once they cut, well, market actually reversed. So I'm just wondering if there could be more upside on the dollar, especially if we consider that the stocks could see at least ABC drop, meaning that the pullback could be deeper. So this could maybe cause some more upside on the dollar itself. Of course, as I said earlier, maybe it's worth to wait on a 100 level to be broken to take us out of this summer range here. Also, what is maybe important, if we get some kind of a retracement here, is that we have some unfilled gap from last weekend, okay? From last Sundays here around 97.60. So if we see suddenly some more weakness, I believe that this could be some interesting support, at least for the beginning of next week, especially if later on we will see some more risk off flows. But if this 97.60 is broken, then I assume that this ending diagonal that I'm tracking will have another leg lower. But still, I'm not in the camp where I would say that dollar has much room for decline. We have seen a pretty aggressive sell-off with this movement down from January highs when Trump took office, and I think that this lag is sooner or later coming to an end, and we will have more risk off going forward. Maybe that's already happening right now. Also, what's maybe interesting to note for October, that dollar, as you can see here on seasonality chart, in October was mainly on the rise, and maybe now we will see some interesting volatility still maybe next week, but then maybe in the second half of this month we could see more upside, especially as I said, if we will see more weakness after that some wave B rebound here on stock market. Now looking at the euro dollar, this one also has seen a pretty nice and important breakdown here, but we are not seeing that kind of aggressive weakness which usually you would expect whenever you have such a strong sell-off, that market will be that investors, traders will be looking to hide into cash. But I still think that, as I said, if next week we will continue to see more weakness, that even euro will come under pressure, and this is something that we were watching for some time, an ending diagonal, and I think that this ending diagonal is a very dangerous pattern, because usually market will move to the upside very slowly, but then it could reverse very sharply in the opposite direction when least expected. But now, as I said, when we are in the risk off mode, maybe something that we have to consider, that euro could maybe even correct much lower. But if we see a rise back above 117.82, then we could see another push to the upside to highs, but then still I would be anticipating a reversal, but the wave count would be a little bit different. And why I'm saying that this 11780 is important is because that for now we still have only 3 legs down from that highs. Okay, so this can be, by the way, an ABC drop, but of course I am prepared to something more aggressive to the downside if this risk of flows will obviously resume. Now let's take a look on cable. Cable is sideways, and I still think that we just have to respect this support at 131.38. As long as we are above that level, which by the way has been important for a few times here. Also, firstly spiked back in April of this year. Then finally we broke through that level, and after retest we always found some stabilization. So I'm just wondering if this sideways pattern will resume. I do not see any kind of a chance for immediate bullish reaction here, because even if this will be a sideways like a triangle formation, it's still far away from completion. And even if we see a retest of 31.38, it's still very possible before we may finally stabilize and complete this wave 4. So in my opinion, with risk of flows, with dollar index potentially trying to bottom, we of course will expect that cable will either retest a little bit lower supports or maybe even just stay sideways here in this range. Now looking at Aussie, now here, as you know, we have seen a pretty strong sell-off yesterday, and the reason for this was obviously the risk of lows, and commodity currencies are very sensitive to risk, and also they could do very good if we are in risk on mode. But now when the stock market has seen a very strong sell-off, it looks like that Aussie could also experience even more weakness. Now I'm observing the potential complex correction here that is still underway, basically from July or June of this year. So we are trapped in this very volatile range, and if I'm correct, then we could retest the lower side of the range. So very strong and interesting support is at 63.70 up to 64.15. So that area could be very attractive. I'm in the camp that we will not revisit anytime soon these 0.59 lows from April. So I think that in the near future, obviously we could see more weakness, because if we are in a flat, well, the flat is a 3-3-5 pattern where you have 3 waves down, for wave A, 3 waves up for a wave B, and then 5 waves down for this wave C leg. So for now we still have only 3 legs down, and the reason why I think that there could be more weakness is because if you take a look on this 4-hour time frame chart, you can basically see that we are falling quite aggressively, right? Now I will also add to this wave count the correlation with the S&P 500, and you can see that the correlation is not really perfect, but at least if you take a look on cycles, the positive correlation is certainly there. And because we have this very sharp sell-off on stocks, which, as I said earlier, it's only wave A, only first leg of this 3-wave correction, that's why my assumption is that this Aussie will also see more weakness after some rebounds and potential sell-off later on after these 4th wave rallies. So with the risk off mode still being here, I just think that Aussie could really see a movement down towards this 0.6400 area, which could be quite interesting and attractive potential support, especially if we'll have 5 waves down here in this wave C, and then we can maybe look for potential stabilization here. Now looking at dollar Swiss franc, now this one is interesting. Swiss franc has seen a very sharp recovery. Usually it's seen as a safe haven, especially when you have some uncertainty going on. It's quite interesting to see this kind of a situation if we consider that Swiss National Bank has warned that they could even move to negative rates. They could even be looking to intervene in the markets if needed. Okay, so what I think it could happen here, if there would be more risk-off flows, if dollar Swiss or Swiss franc in general will see more strength versus dollar and other currencies, then at some point they will again become very loud, and maybe they will take some actions that will try to prevent Swiss franc from rising too far. Now, when it comes to the wave structure here, we are looking still at an ending diagonal. Firstly, I thought that maybe ending diagonal has bottomed here, but because of this recent sell-off that is now threatening this lower trend line support of this channel, I just assume that there is a real chance that we'll see more weakness, also because this rise has been made by 3 waves. So Swiss franc is not showing strength only against the US dollar, it's also turning lower versus the euro as well here. And I think that Swiss National Bank is watching euro switch more than any other currency pair. So what we should watch for, and maybe just be aware of it, is that they could really act, the Swiss National Bank could really intervene, or maybe just took some actions that will try to prevent Swiss franc from rising when Euro Swiss will finally maybe retest and make another low here. So if Swiss franc will see another push to the upside versus euro, then I think that this could be a massive reversal later on that could also be visible later on through dollar Swiss franc. So for now, I just think that this pair still has maybe room for another push to the downside, but then I would not be surprised if this ending diagonal, which is in play for the last 5-6 months, could come to an end. Now let's take a look on dollar yen. So as you know, yen pairs have seen a very sharp move to the upside with a gap last week, but now I think that sooner or later these gaps will be filled. It's not only dollar yen that has seen a very strong gap to the upside. Of course, a lot of yen crosses did the same. And now what is important, and what I also mentioned in F.A.C.E and webinar, that we don't know what can trigger the fill of these gaps, which will very rarely stay open. But I said that maybe this is going to be the risk of moves. It would be much easier for them to get filled, or maybe if Japanese yen would rise based on rate hike expectations. And now when we have this risk off going on, I would not be surprised if market will try to move towards these open gaps from last week. And now if you look at dollar yen itself here, we have some very big sideways price action. I do not see any kind of an impulsive price movement for the last few months. So I will try to look at the whole cycle as a, if we move to the upper side of the range, then we can later on move to the lower side of the range. So I adjusted the wave count a bit, and I came out with an idea that that was just a 3-wave pose here with a triangle in the middle, and we are now falling down from the 61.8% fib retracement. So we have this big open unfilled gap a little bit lower. So obviously that's also another reason why I think that maybe this could be like a magnet zone, at least for the next week or 2 weeks, that may try to fill this gap, and then let's see what happens down there. But overall, I just think that this whole sideways price action is not really finished yet. If it's a triangle, we need more sideways. It will be more sideways and even more nasty price action going forward. But at least, as I said, in the near term, maybe we could be seeing a reversal lower for wave D, but with the first target trying to fill this gap, because keep in mind that moves out of a triangle that occurred here in wave B, well, usually that's the signal, that's the final, that was the final leg of this 3-wave rally up from that April lows. Now let's take a look also on crude oil. Now crude oil, as you know, has seen a very sharp, strong move to the downside. Maybe it's worth to mention that the importance of this $67 per barrel. If you look here, even go back to 2019, that was a very important swing resistance level. Then we finally broke through here in 2021, retested this whole zone for a few times before we rallied, and we came back to the downside, retested it for several times, and now finally we again are below that level. So maybe we have to respect that market will try to retest lower prices. Also, as we know, Trump administration, Trump in general, wants lower energy prices, lower crude oil, because obviously he thinks that that's good for economy. And with what's happening right now, it looks like that that we really could be headed a little bit lower here. And it's not only crude oil. If you look at ExxonMobil, you can see that here we are trapped in some kind of a consolidation. So what's good about this consolidation is that even if that's a triangle, right, I just assume that there is a bit of more weakness possible for wave E after the market has filled this gap from earnings gap back from April. So that was a very important resistance up here at around 118, and I assume that we could be now in a early stage for this new corrective free wave drop for a wave E that belongs to higher degree correction. So why is this important? Is because if ExxonMobil will stay in near-term bearish trend for wave E, then I also obviously assume that energy prices will also continue to see more weakness, maybe even try to retest these April lows here. So looking at the crude oil wave count with that in mind, well, maybe we are still in late stages of this potential diagonal formation. So I'm looking for a retest of this April lows, and then potentially we could even see $51 before market may finally stabilize. So based on everything what I see, maybe that's the most appropriate wave count to look at the moment. Also, we have seen a very sharp sell-off here happening after a broken trend line that was retested once, then even twice, and then market have seen a very sharp sell-off here. So I assume that we are in the third leg of decline, and even if that's only wave C, or ideally wave 3 of a new impulsive sell-off, well, usually you will see the third leg will be equal to the first leg. So I'm looking for levels around $56 per barrel, and then obviously we could see even more weakness later on. Now looking at German DAX has a pretty dangerous pattern here. Okay, again, it's potential wedge, an ending diagonal. So whenever we are close to all-time highs, I become a little bit nervous because I just know that we could reverse and top out anytime soon. And we have recently seen a push to new all-time highs, and now we are reversing. So at least in the near term, I would be expecting some more weakness. So that's only first leg of potential free wave drop that could extend even lower for a wave B. Keep in mind that each leg within a triangle should be made by three waves, and I assume that this might have been wave A, so you are now in a wave B, meaning that I will be looking for deeper pullback, and then let's see what happens around the 61.8% or maybe close to 24k. This could be interesting support. If these levels will be retested with only 3 waves down into that area and we stabilize later, then I still think that there is a chance for another, but then final push to the upside within this ending diagonal. So I think that if we are not topping out here yet, then in 2026 it could be very massive reversals, not only on DAX, obviously on a lot of markets. I just think that we just hit pretty important big levels up here, and it's just a matter of time when we'll see some new massive corrections going on. Of course, not all of the markets will make the same high or same bottom on the same day actually, but obviously cycles are there pretty similar. Now looking at gold. Now gold, as you know, is in a very strong recovery. It's explosive move to the upside. There can be now even more extreme positive sentiment in the rush into gold, especially if this risk-off moves will resume. The gold is holding up quite well here around 4k, but it's a pretty extended level and target with this wave 5 coming out of this triangle, so there can be some massive reversal still that I assume that could show up still this year. But if you take a look on a smaller time frame here, since we are holding these levels here after a drop towards 3,950 and now holding back above 4K, I just think that there is a chance that we will extend even higher within this blue wave 3 cycle on the intraday chart. So I'm bullish on gold. I just think that there is room for more upside, but of course just be aware of much bigger sell-off in weeks ahead and a new correction. But as I said, just a new correction. And the reason why I think that gold on a longer term could stay here in this uptrend after any kind of a deep pullback is because if you look at the dollar Chinese yuan here, okay, you can see that we had a very interesting reversals back in 2016, 2019, 2022, and also this year in April. Okay, so this reversal, in fact, that were the highs on dollar Chinese yuan when gold finally bottomed and it moved sharply to the upside. So it was an example, as I said, in December 2016, then 3 years later here, 2019, then 2022 also gold has seen a very sharp move to the upside. And now despite having already this very strong movement, dollar Chinese yuan has topped out a bit later. So this obviously caused even further upside on gold, and that's why we have seen a very strong and explosive move higher here still on gold that is now extending towards 4K level. And as I said earlier, why I think that gold could stay in uptrend? Well, because if I look at the interpretations of this wave count of dollar Chinese yuan, well, I think that that was a 5-wave movement here completed with the diagonal, and now I'm expecting more weakness. And the reason is because if you look here on this daily time frame, I can count from that wave 5 high that belongs to that monthly chart 5 waves down. So after a pause I would be expecting more weakness, and that's why I think that based on this more downside potential dollar Chinese yuan, I think that after any kind of a pullback, gold will also stay in uptrend. Now, also looking at silver, we finally touched these all-time highs. The move came very explosive, very aggressive, but always when you're at all-time highs, there could be some interesting volatility that will drive the prices in both sides in the short term to try to liquidate some leverage positions on both sides of the market before market may again try to form some kind of consolidation and continue higher later on. So at these important levels, maybe there will be some new pullbacks going on, but if you take a look here, maybe on this time frame, any kind of a pullbacks, I just think will be just temporary. Even 10% of silver with this volatility, 10% of pullback is totally fine and normal. It doesn't mean it's going to be a new kind of a bear market. I think that very important level is at $39.60 or $40 if you want. So this, as long as we are above that level, this current cycle could obviously resume. But maybe in the near term, watch for some period of consolidation. That's when new opportunities could show up. So you want maybe stable price action or pause, new breather within higher degree trend before you may look for potential new opportunities here, or maybe even join the trend. So I would be just waiting on some consolidations, maybe similar to this red wave 2 degree or maybe even blue wave 2 cycles. So if we see this kind of a slower price action in sideways range, then I think that new opportunities could show up. But I certainly think that any kind of a deeper pullback could stop either around 48.60 is the first support. Below that you have 47 and $46 as well. So watch out for this maybe limited weakness if we see any kind of aggressive sell-off. And now finally, let's take a look on Bitcoin. So firstly, this one is pretty interesting. This shows how popular was Bitcoin on Google. Okay, how many times people were searching Google for this for this set. So basically it was the most surged back the most in August of this year. Okay, you can see that we have seen a very sharp extremes compared to the previous previous measures here. So I'm thinking that we are now in this very late stages when we should be aware that maybe cryptocurrencies are going to see some slowdown and a new correction in maybe in 2026. Of course, that doesn't mean that we have already seen the latest important top. Maybe there will still be another push to the upside, but I'm looking at cryptos as a cycle analysis. Okay, from a cycle perspective, I just think that we are in a very late stages here. And also, if you look at this cycle analysis, we have seen here 1 year of a pullback, which caused around 70-80% of a drop back in 2014, 2015. Then we have seen 3 years of a bull run, 35 months. Then another 12 months of a drop, another 35 months of a new rise, another pullback for 1 year, and another 35 month of a bull run up from November of 2022. And this takes us right now into the October of 2025. So the final month of this bull run. Of course, it doesn't mean that these cycles will work to perfection, but we just have to understand that whenever we are at the late stages of this cycle with the price trading at new all-time highs, that maybe it's time to consider and just be aware that there could be some reversals going on. Of course, there can still be some blow-offs moves before we see a final high that will put this market in place. But overall, I just think that next few months could be very dangerous for cryptocurrencies. And if you look at the wave counts here, the bigger cycle shows that we could be trying to complete this 5-wave rise, as I said, from October 2022. So maybe that's even more important when it comes to cycles. If I see bull cycle in late stages, and at the same time I have the wave structure, which shows that we could be trying to complete this bull run, then definitely be on the watch list for potential reversal. Of course, only a drop here below this trend line support would finally confirm that we are reversing. Now, if you look here on this weekly time frame, so that's those 5 waves up from 2022 lows. Even wedge formation is something that we should watch for, but we tested some key support levels around 108 109,000. So around there, it's a very important level. I would call this as a bull bear line. Okay, so if we can hold this, then there's still a chance for another attempt and push higher and then a reversal later on. But if we break below 107, and then just you will see maybe a stable bearish trend that will maybe see a 2-3 weekly closes below this 107,000, and then we even see more weakness. I just think that this will be a really confirmation that we are trying to top out here, and that we should be aware of much more deeper pullback. But keep in mind that whenever Bitcoin is trading at new all-time highs, even if someone wants to get out of the Bitcoin, it doesn't mean that he will move into fiat. Okay, they may shift coins from Bitcoin to some of the altcoins. So there could be still some coins, some selective coins that will see some interesting volatility and move to the upside. And in fact, this happened, I think I have it here. This happened here in 2017. So that was basically the high for Bitcoin in December of 2017. Then we have seen this sell-off for around what? 40% of so, even more on the Ethereum. But look what happened later on after the market stabilized. Well, Bitcoin has seen just a lower high, while the Ethereum have seen a higher high. And it means that money still can move out from Bitcoin into some of the altcoins, and you will see maybe the final push to the upside on cryptocurrencies some alt season before market will fully complete the whole crypto bull run. Okay, it doesn't mean this will be the case right now, right here, but what's really important is that if you will see altcoins pushing to the upside, but Bitcoin will not be following to the same degree, well, I think that this will be the very important potential signal that we could be stepping into the late stages of this bull run on cryptocurrencies. Traders, thank you very much for your attention. Thank you for watching this week ahead video. I know that it was quite long, but hope that you found some value here, and hopefully I will see you in our webinars next week. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.